Boom, shalakalaka. Hey, good morning, Forex traders. Euro, dollar, yen, franc, and whatever you need. You have questions? Ask. Comments? Type them. Anyways, let's go. See you on the outro. Say, hey, how you doing? Happy morning. You can have a good morning if you want. Or you can just be happy one way or the other. Lots going on in the world. It's the economy. That's all. Hey, good camera. So lots of stuff to do today. Let's go through all the majors. Let's go through all the risk currencies. See if we got some yen set up. See if we got some Swissy setups. Take a look at the US dollar, obviously. Go through the calendar. Why don't we do that? Look at the risk events for the week. Answer all your questions and call it a Monday morning. What do you stink? Smell like a plan? Oh, hey, by the way, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com, a boutique foreign exchange trading firm that offers you a fixed spread account, a variable spread account, an ECN account, whatever you want. Each has its own strengths and weaknesses. It comes down to your style of trading. So whatever fits you best, you can get at TradersWay.com. When you're in your back office, please download MT4. And then in the description below here, you can click on that and download my chart templates. Pop it into your Traders Way MT4. You're a golden child. So please ask questions. Please get involved. Please leave comments. Please leave likes. Please ask questions. Please treat everyone in this webinar with the dignity and respect that they deserve. And you'll be granted that same privilege. What else? What else is going on? How do you feel? Everything good? Non-farm payrolls was great, huh? Everybody in America has got a job. Amazing. What is it? What was it? 3.5%? 3.2? 3 point something. Just crazy amazing. So things are good in this economy, but remember, one reason, there are several reasons, but one reason is that the United States has a domestic economy that supports itself. So then when the rest of the world is having a recession because they rely on each other, right? They all get a cold at the same time. Well, the United States will continue to do all right because it's living on its own economy, not right? So there's less exposure to that foreign risk. And so everybody wants in on that. So yeah, everything's bad. Everything's bad. Buy the US stock market. So anyways, cool. Neat stuff, right? Oh, we don't have chat here. Oh, I can fix that, but it takes a bit of time. I'm gonna forget if I don't do it now, but anyways, let's start with the calendar. In fact, let me do that. So while I bring this up, oh, full screen, not good. All right, I spent 12 hours yesterday doing homework. I hope you did the same. If you spent less than 12 hours doing homework, I beat you. I win. All right. Let's do this. All right, I think you should see everything okay. I guess I could expand this a little more. You know, let's make filter it out here. Carney speaking tomorrow. Sev, I don't know. I mean, obviously with the news, it needs time to play out a little bit. But of course, I'm always looking for the prices, right? I'm always looking for my price. So maybe. Sev says, buy some lira. Yeah, maybe. Not right this second, but maybe. All right, so anyways, the pound's going to move tomorrow. That's cool. Keep an eye on that. Then PPI tomorrow. Not that big of a deal, honestly. First of all, we don't have much inflation. Second of all, the Fed's cutting interest rates, so inflation's irrelevant. And third, this is the producer side. And if we don't have inflation, then it's not moving, right? It's not moving CPI up or PCE up, so really sort of irrelevant. Now, what you want to look typically when inflation is creeping up, or you think inflation is going to creep up, and the Fed is thinking about raising interest rates, then PCE would be a front run to, PPI would be a front running sort of piece of information to the PCE or CPI, which then you would then use to extrapolate what the Fed might do. And of course, you're most interested in raising interest rates, but that ain't going to happen, so it's sort of irrelevant. Okay, cool. FOMC meeting minutes, download them and read them. Because now, I don't know if you caught the two speeches over the weekend, but two Fed presidents said that they're not interested in cutting interest rates further. So maybe in the meeting minutes we can find out. Maybe they're going to stop cutting interest rates sooner than later. And if that's true, the dollar will weaken. So don't tell me things like, Wayne, why is the dollar weak today? You should know that. Oh, well, over the weekend, two Fed presidents said they didn't want to cut interest rates further. We know when the Fed decides to stop cutting interest rates, the US dollar will weaken. So do some research. Is that true? Is that not true? I don't know. And then, of course, read the meeting minutes. How many people actually on the FOMC, how many voting members actually want to cut interest rates further? It's a pretty basic question, right? And you're like, Wayne, but I don't understand fundamentals. Well, I'm like, well, I discussed it 2 or 3 times over the last 10 days. I gave you behavioral finance lessons and bond market lessons and one other thing, I think. But anyways, it comes down to, is the Fed going to cut more? Yes or no? And you'll know what to do with the US dollar. Okay? And if, of course, you don't, go back and watch those videos. Okay. Manufacturing data for the pound. Great. GDP? Okay, well, maybe some GDP. Okay. So, yeah, Thursday's booked, huh? So Thursday looks like you're going to have to trade. I'm sorry, you can't take the day off. Pound, euro, dollar. So they're all going to move, right? Everybody's going to move. I got to move. Give me the juice. And CAD NFP. Cool. CAD jobs. Obviously, that's going to be interesting. Let's add a little bit to the flow. Okay, anything else going on? No, I was wondering if that meeting would do anything. Probably not. No. So just the Powell speech today. Okay. That's all I could really kind of like, yeah. So it looks like it'd be an all right week. There's nothing really in our way. PPI is not that big of a deal. Okay, CPI is more of a big deal. But once again, the Fed is cutting. That's the bigger deal that trumps the CPI. Okay, but a low CPI makes it harder for the Fed to cut interest rates further. So maybe that's what we're looking for. But really nothing to really freak us out here. CAD jobs report, not a big deal for the market overall, but of course if you're trading kitty CAD, that's going to be a catalyst. So really cool. Like it's sort of like enough, but not too much, right? So it should be a good trading week, guys. No giant, like sometimes when it's like like central bank meeting, central bank meeting, central bank meeting, what it does is it kind of makes the week either too sticky or too choppy, sort of like an earthquake. Like nothing will happen, then pop, right? And then stick again to the next meeting, and pop and stick again. Yeah, that makes for a lackluster market, because what could happen on a market where central bank meeting one day, next central bank meeting another day, is another central bank meeting yet another day. What can happen is you never actually get decent setups. Nothing actually sets up. And then there's this big volatility moment. So, okay, you get a news scalp or something. But then there's no follow-on because the market freezes again, waiting for the next big event. And you never really get a good opportunity to get in. And there's never one smooth move. And, it's just too choppy that week. So luckily we don't have anything like this. It should just be fine. BPI, CPI out of the United States, FOMC meeting minutes, great. But I would read that. Like we're getting to the point where the market's starting to wonder how low are interest rates in the United States going to go? 0? Above 0? Like where is the bottom? And this is what most professional investors would be doing, is reading these FOMC meeting minutes, and to see what the discussions were behind closed doors. Okay? Remember, after the blue book, they then discuss and debate, right? Right? And it'll say some committee members said this and some committee members said that. And you get sort of an idea what was being said at the time, okay? And of course, all you're looking for is, aha, I'm a dollar bear, okay? Pro Trader says, but low interest rates does decrease unemployment. Yeah, but nobody's unemployed here. So you have to put it in context. Okay, it has meaning in certain contexts. Nobody's worried about unemployment in the United States, right? We're at full unemployment, the best it's been in like 100 years. So you're like, that's not the issue, right? So anyways, that's not going to move your markets per se. So anyways, let us go now to Pro Trader says low interest rate, weak currency cause people, well, not when it comes to the reserve currency. And I've spoken so much about that over the last 10 days. I just can't bear to spend more time on that. But yes, if you don't understand why when the Fed cuts interest rates, the dollar goes up, then you need to take a fundamentals course. Okay. All right. All right, here's a trade that we set up last week. What do you think? Are you still going to do it? We're sort of in between. Okay. We know somewhere between there and there, we were planning on getting long, right? Cool. Alejandro says U.S. is the best democracy. And what does that have to do with anything? All right. Let me get my drawing tool here. Good morning, by the way, guys. It's good to see you. I hope you had a wonderful weekend. I'm exhausted again. 8 o'clock in the morning on a Monday, and I'm exhausted. Put in a lot of work over the weekend. Okay, where'd my drawing tool go? Hello? The weird thing is if I double click the drawing tool, it'll open the app up twice, and I'll have two drawing tools, which is a really strange thing. All right, I got it now. Cool. So you put it over there. So anyways, what do you think about something like this? Come on. Okay, we did this last week. We were up here, and I said, wait for it to come back down and then up, right? Last week I said this price, because I was using this roll reversal area, okay? See, right, the roll reversal area. You could also mark it as this top, this top, this top, this top, this top, or that top, that top, that top, that top, that top, or you could say this week's central pivot point, or this week's M2. But the most important thing is after the breakout, we were up here. We know traders that lose money buy after the breakout because they don't understand that you're supposed to buy low. Okay? So anyways, here's your first primary level of support, prime. Okay? And then here's your roll reversal. So now the big question is, how are you going to play it, Haas? You still going to go for it? Or are you going to walk away? Oh, schoolwork. Yes, sir. Schoolwork. I'm just saying, look, I spent just yesterday 12 hours, which means I had the support of my wife and my children and all that kind of stuff. They knew, and I told them, I have to work like a dirty dog on Sunday. I'll come up for dinner, right? I'll say hi once in a while, but I'm just locked in my office, right? So that's my attitude, and so I invested that time into my education. And I hope you're willing to make such sacrifices, in this case, in preparing for Forex, right? Munchkin says, is it possible? Of course it's possible. Is it likely? It shouldn't be. It could, of course. Okay? But I don't think you'd be planning on it, but it's very disappointing to be in a scenario where, let's make it a solid line, where the market does that and that. Because then that changes things too, okay? So that's one plausibility, of course, which then would put you, okay, let's put pink again, then puts you like this. Okay? It doesn't really benefit anybody. It's just another range, essentially. It just gets smaller and smaller. If you could only trade one trade a year, what would it be? Suppose it'd have to be the highest yielding currency. Okay. So anyways, I don't want that, so that's not what I've planned. Okay? You guys already know this because we did it last week. Okay? My plan is that this is a higher high. Okay? And I'm trying to keep it above that. You can see we're already below, but this is okay because in this week's swing trading plan, okay, my range is in here. Okay? So I'm cool. That's okay. I can do that. Okay? So I Wanna fall in love with you. I am hoping for something like this. But this is what we planned last week. So you have to realize, like, what I'm doing today goes back to what we discussed on Thursday. Lim, could I correct you if you're wrong? Oh, I'm happy to do that. Lim, you got the first bit. So the difference, guys, that you're not fully connecting with, what the European Central Bank does and what the American Central Bank does are not the effect. Let's say the policies are exactly the same, quantitative easing. Okay? The results are not the same. The actions are the same. Government buying bonds in its economy. Okay? The consequences are exactly the opposite. So the ECB does it, the euro weakens. The Fed does it, the dollar strengthens. Okay? I spent at least a half an hour last week describing this in a webinar, going through how behavioral finance works in the bond market to show you how that happens or why that happens. But ultimately, the euro is not a reserve currency and the dollar is. So the consequence of the quantitative easing policy by the central banks are quite different, even though the actual actions are the same. Okay? Okay. So there you go, guys. So we were here last week talking about buying in here. Okay? So it comes down to whether you do it or you don't. If you're a bull, you're going to take it. Oh, right on. Thank you, Ronnie. Okay. Huh. Somebody has this as support. Cool. So that's our non-farm payrolls analysis, guys. Isn't that cool? All right. So anyways, we'll see. Nothing to do now. Too late, y'all. Next step would be up, 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 down, down, buy. Okay, now you could say this is euro, and you're like the European currency is going up in value. Or you could say some people think the Fed is going to cut interest rates. Okay, Maurice, Dwayne, what's up? Yeah. If you think the Fed's going to start talking about cutting interest rates, or no, I mean, cutting of interest rates, if you think we're near the bottom at the next, let's say at the next Fed meeting, they don't cut, or they cut, but then they say they're done cutting, whatever, If you think we're closer to the end of the policy, then you will get a change in direction. Maybe that's happened, maybe it hasn't happened. Okay? But at some point, you're going to need to start thinking about it. Okay? With you. And you'll already know what to do, huh? Abe says it would be crazy if they cut the interest rate again. No, I don't think it'd be crazy. Okay, so like Esther and Abe, I need to pick on your language. So don't get upset at me. Esther, don't say things like, I want. It's irrelevant. It's not going to be helpful to your trading. Okay? You will simply wait until you have evidence that it's falling, and then you'll fall. And then you'll sell. But don't like want it to go down. It's not a helpful language, and I'm being very picky. Also to Abe, like, it would be crazy. No, it would not. So let's take that, language out of our communication with each other. And really, you're communicating with yourself. No, it wouldn't be crazy. In fact, that is the trend. It would be quite amazing if they didn't cut interest rates. But if they did, you would already have a plan for that policy in place. I want you to plan for the day that it's clear to either the market, from extrapolation or from the Fed actually telling us. It doesn't actually matter. When the market believes that the Fed is done cutting interest rates, the dollar will weaken. So I would rather you say, okay, what would I want to see in the marketplace before I become a buyer? And then you would also try to identify key levels of support, like key prices that might happen at, right? And try to line those two things up, okay? So if you're a bull on euro dollar, not because you're a bull on euro, but you want to be a bear on the dollar, at what price might that happen on euro dollar? And then you might say, there's no way in the world you want to buy euro dollar. All right, well then how about pound dollar? You're like, there's no way. Then Aussie dollar. Okay, USD CAD, or just find something, right, that you would want to sell the US dollar against, and then start preparing, like mentally start preparing. If it happened today, or what's going to happen today, what would make, let me propose a real question to you guys, and I hope you answer. What could we use in the short term to help us potentially make this decision of when will the market believe the Fed is at or near the end of their policy? What could we do in the short run to help us analyze whether the market's changed its opinion? Inflation trades? Okay. So Esther, same thing. You would like to see it go down? Irrelevant. Cut it out of your thought process. It either goes down or it doesn't go down, because you have a ton of hope in your language. There's no hope in the markets. There's no hope in the market. You need it to go down, it's going to go up. So if it's going up, now you'll know to cut and get out and try again somewhere else. But your language is very dangerous. And I am being nitpicky, but I need to be. Weaker unemployment, monetary policy, monitor inflation, U.S.-China deal, economic strength. Most of you guys are way too esoteric. What can we do on the short run to determine whether the market begins the process of believing the Fed is going to stop cutting interest rates? Fed Market Watch is better, but it's what did we just look at 15 minutes ago? Okay, Gary throws in a good one. There's a Fed, right, speech by Powell this morning. That could be a moment Jerome Powell could say, we're not going to cut interest rates anymore. That instant, that 1 billionth of a second, that singularity in the space-time continuum, that moment, dollar weakens. And probably for a year or 2 or 3 or 4 or 5. Okay. Build on that thought process. There's a Fed speech today. What else is happening in the short run that could help us analyze? There you go. Chrissy's got it. The FOMC meeting minutes on Wednesday. Read the report. This is an overview, the minutes of the discussion by the Fed presidents and their staff, voting and non-voting. Okay? And it may be clear that at least half of the Fed presidents don't want further cuts. And you have to say, oh, all right. Now you're like, dude, just one more person. One more person could change the whole thing, and that radically changes your behavior. See, when the Fed cuts interest rates, as I have explained, you simply buy dollars and you make money. If you don't understand that, maybe that's why you might be losing money right now. You're not connecting the dots. And then in that bajillionth of a second, today, Jerome Powell could just, and I go, oh, look, 1 second ago I was a dollar bull, but now I'm a dollar bear. Done. Because it's a change in policy by the central bank. The central bank is controlling monetary policy. Monetary policy controls the value of the currency through supply. It's a 1-for-1, so to speak. What the Fed's doing now strengthens the dollar. If they stop doing that and do the opposite, or let's say just stop doing that, then that is the top of the US dollar's value. So if you're looking at the dollar index, it's probably going up and up and up and up and up and up, right? And all of a sudden, as soon as they say, we're done cutting interest rates, the value of the dollar should, maybe not 1-for-1 per minute, right? But if the dollar index has been going up, then it should start a new trend coming down. And people are like, man, I was buying dollars, now it's not working, I don't know what's going on, I ain't trading no good. And I'm like, the central bank simply tells you what to do. So, in fact, we could look at a dollar index. Baby says, aren't the meeting minutes lagging? Yes, the meeting didn't happen on Wednesday. It happened in the past, yes. So don't they take into account the dismal data? No, but you have to understand, we don't know what was said in the meeting. Now think of it. The Fed controls the money supply. The money supply determines the value of the currency. So the people that make the decisions that control the value of the currency, okay? They're the ones that make the decisions. They got in a room and they talked about it. Now we can be like a fly on the wall and say, oh, what did they say? What were their concerns? What are their thoughts? What are their feelings? Now we get to learn something new. Yes, we know we've had more economic. Yeah, we got that. But we don't know what the personalities are saying to each other in private. You understand? So now we get inside information. We don't know. So there's a difference. They cut interest rates. Great. If it was unanimous, then we were like, all right, they're just going to keep cutting interest rates. Now it's sort of like, we know it's 50-50-ish, but who's on the fence? We need one more person, one more voter on the committee to say, yeah, I think we've gone far enough. It just changed everything. Trillions of dollars will flow differently now. The U.S. has a fiscal problem. Yeah, so what? Who doesn't have a fiscal problem? Okay? Okay? So pay attention. Okay? You got it? Hopefully that's helpful. So one thing you can look at is there's the dollar index over the last hour. Right? And so we're since January, it's been going up. Right? Wouldn't you agree? Doesn't it seem since January the US dollar's been going up? Okay? Mark my words. Pull out a chart like this and look at what happens when the Fed cuts. Or not even cuts. No, not cuts, but just simply stops cutting. And you'll probably see a move like this. Okay. Was the Fed raising interest rates or cutting interest rates from 2016 to 2018? Give me an answer, guys. Was the Fed raising interest rates or cutting interest rates, let's say, just 17 and 18? 17 and 18. 2017, 2018. Were they raising interest rates? Okay? So this is what happened. So I know this is not what you were taught in university. The value of the dollar went down for years. Okay? Let me ask you this. How many people went to university, took an economics class, and learned that when the central bank, when interest rates fell, the currency would weaken, and when interest rates rose, the currency would strengthen? How many people were taught that? In a textbook, in a lecture, all that kind of stuff, right? So your textbook told you, let me just point this out really quickly. Your textbook and your professor at a prestigious university with 25 years of education and 45 years of teaching, and your professor's probably 82 years old, tells you that when the Fed raised interest rates, the value of the dollar would go up. And that when the Fed cut interest rates, the value of the dollar would go down. I'm right. Your university, your professor, your textbook, they're all wrong. I'm right. And by the way, I've been teaching people this for years. Okay. Oh, I argued against my professor at Harvard too. This isn't a Harvard thing. Right? This ain't a Harvard thing. As long as I'm right and you're learning from me, that's all that matters. So congratulations. Hey, thanks for being on my team, bro. Huh? Abe. See, Abe's not listening. I just explained 22 minutes ago. When I talk about the United States dollar and the Fed, I did something like this. When I'm talking about the Fed, I'm not talking about the ECB. Okay, let's change that. When I'm talking about what happens when the Fed cuts interest rates, I'm not talking about what happens when the Reserve Bank of Australia cuts interest rates. They are not the same. You have to understand that. The United States, right? The US dollar, the United States dollar is the reserve currency. Not the Australian dollar. Different dollar. So there's going to be a different consequence to this. And it has to, again, to do with the behavioral finance aspect. So you're going to have to go back and watch the lesson I did last week, right? Where you see foreigners around the world. Remember, this is all relative. Foreigners around the world are looking at their economy and going, meh. And then they look at the U.S. economy and see not only is that based on the reserve currency, but it's also 70% domestic. There are very few economies on the world that are 70% domestic. Except for the economies that don't participate globally, right? So you can say, well, Turkey is like 70% domestic. Well, it doesn't have an economy. Not on a foreign basis, so it's not quite the same, right? So anyways, it's when foreigners say, I can invest in the United States, get a domestic-based economy, which is not going to be exposed to the foreign risks as much, and has a tax base. So if the government is short on money to pay you back, they'll just take it out of taxes and pay you back. They'll always have a source of money, right? So you'll always get paid. The risk is very low. And when you look at getting like 1.5% of the United States versus zero somewhere else, you're like, dude, that's a sweetheart deal. Very low risk. And an interest rate differential that's huge, all based on a domestic economy that's booming. You're like, that's so much better than my local economy, so that's where I'm putting my money. And the dollar gets strong. Strong, strong, strong. But you're like, but they're cutting interest rates. Go back and watch the video, and I'll explain the logic, the human intelligence behind driving up the value of the US dollar as interest rates are coming down. Watch it. I already did it a couple of times. I don't want to do it again. Okay? Cool, right? Hey, it's just there, man. I'm trying to help. I preach to teach. Hey, the new template download's available. Did you see that? Including this. I'm going to make some more updates and changes. I'm going to take some money and I'm going to give it to a developer to make MT5 versions of all that. So if everything you see here you like, and you're like, yeah, but I want that on MT5, you should sign up as well. No, I think you're on the old website because the new one is secure. I can double check, but I know I paid for this certificate. http://www. Okay. Check it out, man. Check it out. If you want the MT5 version, sign up now. And I just take the money and I go hire a programmer, then I'm going to put it up there so they'll be like download MT4 file or download MT5 file. And they'll just be side by side and Everyone will be super happy. So euro going down a bit. I mean, euro going down, up a bit, but yen going down a bit. That's cool. Aussie a little low. Cool. Swissy pretty low. Or, I mean, Kiwi pretty low too. Pound a little sideways. Dollars. Okay, cool. Oh, that's on weekly though. I got to go back on hour. So it looks like we're just warming up, right? Which symbols? Look, pound, Kiwi, I should probably put that on Swissy just to... No, no, no. I don't want to do that. Oops. Oh, dang it. I messed all of this up. Hang on. Talk amongst yourselves. Don't get verklempt. Pound, pound, Swissy. Kiwi. That should be Kiwi something. Kiwi CAD. Fine. Okay, this was supposed to be Swissy yen. Where'd that go? Swissy yen. And then that, I wanted USD CAD. Let's do that. Nothing's actually changing, so it doesn't matter. I just like congruency in the logic. Can only pay with credit cards. Yes. Yeah. Okay, then I'll check it out. Then we're waiting for the certificate or something. Okay. The processing part is secure, but so anyways, we're waiting for it. I did it a while ago. I'm surprised that it's not done, so I'll follow up. In Europe, only old people have credit cards. Yeah. What would you prefer to use, Esther? You're looking like for a Bitcoin or something, or what's the alternative you're looking for? I'll look into it. Yeah, I thought I'm going to add some more, Peter, so there's actually going to be some more. It's the same thing. A debit card and a credit card is the same thing. It's a Visa, MasterCard. It doesn't matter. Oh, I see. Yeah. Well, here's the thing. Everyone bitches about something, right? So when I used PayPal, everyone bitched about it. I hate PayPal. PayPal, blah blah blah, blah blah blah. And then I switch away from PayPal, and everyone's like, "Oh my God, I need to use PayPal. I can't do it without PayPal." I'm like, I'm screwed either way. But yeah. Okay, so anyways, let's move on.com. Let's go to look at the dollar pivots. Girl, you know it's true. Yeah, Bitcoin's okay, but not for a $5 transaction. Okay. So I do business with Bitcoin from time to time. I do more than $100,000 a year in Bitcoin, but it's not something I do often. I'm certainly not going to do a $5 transaction. At this point right now, I'm just not set up for it. Anyways, cool. So we've already done. And you can see, by the way, isn't that amazing? We did this last week. Ciao. And then it's moved up. So this is actually stepping up from our entry down in here. How gorgeous is that? I don't remember doing it, but we've clearly done it. Very cool. But what about the other ones? Okay. Once again, this is interesting. If you look at it, in this case on a 4-hour chart, you can see this is sort of a double bottom. Higher high, okay? And what you're trying to do this week is get it back up to the resistance level. Oh yeah, Jimbo, I used PayPal for 20 years, but yeah. Getting a headache. I don't think I'm sleeping enough. Oh, too much work, man. Too much work. Been analyzing this company, going through their income statement, their balance sheet, their cash flow statements, going through all these things. Like, the return on assets is so much better than the return on equity. And did you see the inventory turnover? Oh my God. Their net operating profits are so better than their... And then you have to analyze that company versus market averages. So now you got to benchmark everything. And I'm just, oh my God, I'm so sick of it. So sick of it. Oh, I'm so sick of it. Ugh. Yeah, it's because I'm not wearing glasses. Or the opposite, I think it's because I've been wearing glasses too much. And oh, their debt service coverage ratio should be improved. Sucks. Anyways. Dollar weak against euro. Dollar might be if it can pick it up. Remember, so look at pound here and put this into context. We know on a higher level we want to see something like this, and where we are, this part of the elbow is right here, okay, and now we're on top of the weekly M2 monthly central. So if this goes up, if the dollar weakens versus the pound, and it's already weakening against the euro, maybe we generally get dollar weakening. And what is that possibly a sign of? Possibly the end of the Fed cutting interest rates, and you're like, oh, people are tiptoeing in. So I'm trying to get you to think ahead. Some traders may already be looking at the end of the Fed cycle and may already be putting trades in. The thing is, I'm not sure if you're ready or comprehending that potential change in the market. Okay? Who says the euro dollar going up has anything to do with the euro? Okay? Yes, you could use COT for this, absolutely. Just because euro dollar is going up does not mean the euro is going up. It means the dollar is going down, or could mean the dollar is going down. Well, it can mean dollar is going down only and euro is stable. It could mean euro is going up and dollar is stable, or it could mean dollar is falling and euro is going up. I suppose it could even mean euro is going up more than the dollar is going up. Okay? So don't just look up and like, oh, it's euro. Well, the dollar is very much more important than the euro. Okay? Okay? So, just, I don't know. Shouldn't matter. Shouldn't matter none. All right, so anyways, dollar might be weakening against the Swiss franc. We know this is the weekly sell zone, right? We know if you were a bear on USD Swiss franc, you'd be selling there. Okay? Just like if you're a bull on pound, we know you'd be buying here. We know that. It's very factual. Okay? On a weekly basis. Now, let's take a look at this day trading setup on on Aussie. Day trading. Okay? So, if you were a day trader on Aussie and you were selling the Aussie dollar, this is the perfect price and this is your target. Cool. So, if you're a bull instead on Aussie dollar and you want Aussie dollar to go up, this is your price for tomorrow, so you probably should be buying it today. Not because of today's price, but because of tomorrow's probable price. See? If you're still looking at your 15-minute chart, watching your MACD saying, am I supposed to buy it now? You don't know how to trade. You need to be thinking about tomorrow's prices, especially if you're a day trader. Okay? Okay? Or if you're still a bear, what are the bears going to do? Well, that's pretty easy. They're going to sell now. Somewhere in here. Why? Because of tomorrow's prices. Tomorrow. Everyone's thinking about tomorrow, guys. Everyone's thinking about tomorrow, not today. If you're a bear, you should be like on this. Like stink on a pig. Like ticks on your dog. You need to be on this. Okay? Right on, Sev. 67.50 would have been your number. Right? Yeah, look at that. Crazy. Cool. All you need to know is whether you're a bull or a bear. If you're a bull, is this a good place to buy? No. If you're a bear, is this a good place to sell? Pretty close, somewhere in there. Closer to 50 would be most ideal, but if this sucker rolls over, kind of have to go with it. Okay? Do some metals? Okay, I'll do some metals. This is gold, but we can do silver. Okay. Cool. Well, very, very clearly, bulls bought this at a perfect entry. Beautiful, absolute perfect entry on the first day of the month. They bought it the exact price they were supposed to buy. Notice it wasn't 17. It was 16.90. Beautiful. Okay? Now it's the bears' turn. The bears actually want to sell here, and they want to sell here in general. Okay? And then they're going to look at roll reversals. And we kind of have, ooh, well, this one's taken care of. And so this bottom to this, there's something going on in there. So I'll mark that. You can see it's pretty close. So we have sell zone 1, sell zone 2, buy zone 1. Okay, now, if the bulls are going to try again and defend, they have to have a plan A and a plan B. Plan B is going to be buy the double bottom. It's not ideal and they don't want it to happen. That's why it's a plan B. So you can say bullish plan B, buy double bottom. Okay? La la la, la la la. So what is the plan A? Plan A is weekly buy zone. So I'd be a buyer at 1740 to 1720. Okay? So plan A would be bullish plan A, buy weekly swing. So easy. It's so easy, easy. Everybody's trying to please me, baby. It's so easy. Nothing seems to please me. You know it's alright. When I fade into the night, see me hit you, you fall down. Boom. I see you sit there. You think you're so cool. Why don't you just... All right. How does that look? Is it all right? I didn't want to make this a... Yeah. Yeah. I was a kid in the 90s. What can I say? Oh, that don't work if I zip out. But anyways. Yeah. All right, so there you go. Pretty explicit. And then, of course, bearish plan A, bearish plan B. Is that right, Russ? Oh, I'm getting there, Zabear. I'm getting there. I'm not quite yet, but I'm on my way. I haven't slept enough, guys. Holy smokes. What is it now? 9 o'clock in the morning? I am so tired. Bye. Look at this. I'm eating my dinner at my desk. You know you've had a long night if you're eating, you know, soup for breakfast. Mm-mm-mm. Mm. So what's up? That's some silver. Hmm. They don't sell that at the bookstore, at the coop. All right, yeah, I'm losing it, guys. I'm tired. XAU, let's do some Goldilocks. Okay, I can see what bears are doing. If I was a bear, I would have nailed this. Okay, I would have nailed this Sunday afternoon, nailed it. Or post NFP, nailed it. Front run, dude. Look at this. This is so crazy easy. If you know what you're doing, anyways, I suppose. I will label this crazy easy sell zone. Okay? Crazy easy sell zone, dude. Everything lines up perfectly. Like, if you want gold to go down, you didn't see that? Uh-oh. We need to add some resources. Okay? If you're a bull, I actually like it a little lower as a bull. I'm thinking more like that. But okay, it kind of falls into my 80-20 rule, and I don't want to go into my 80-20 rule because it's really complicated and confusing. But often 80s work better than 00s, 20s work better than 00s. And so if you follow my 80-20 rule, you're kind of like, well, that is pretty logical, and this is pretty logical. And it doesn't really get you a direction. So if you're already a bear, this, oops, come on now. This was pretty straightforward. If you're a bull, this is pretty straightforward. I think you're going to get a lot of trading around 1500, but I think it's actually irrelevant unless you're an amateur. And you get caught up in these psychs. I don't get caught up in psychs. So I want hardcore support. I see this as support, and I see this as support. Okay? So I got two buy zones. And really, I only have really one sell zone. Okay? So, right? We're either going to double bottom at 67, right? Ideally, we're going to hold above 80. So really, the numbers really are 80 and 70. Not quite, but roughly. And then this was a sell basically at just under 20, but yeah, okay? So I think since this 20 is in play, this 80 is in play, and so if you're a bull, you're kind of looking at this, okay? So let's say you're a bull, and this goes up. What does this mean for the US dollar? Yeah, thank you guys for attending today's webinar. I appreciate it. Please ask questions. Please subscribe so you can come to tomorrow's webinar and get notifications. Okay. US dollar weakening. Thank you. And if that continues in trend, what does that mean the market thinks of the Fed? Come on, let's string these pearls together, guys. Gold up, dollar down, Fed policy change. Yeah, that's actually the best answer. It's not that it's up or down, or it's just simply that it's a change, and right now the current policy is dollar strength. Cool. Cool. Very good. Thank you. Thank you. Very good job, guys. Hundo P. 100% correct. Nice. Nailed it, huh? See? It's so easy. Yeah. Okay, that was gold and silver. You're welcome. Guess we should do some yens before I go to sleep, get some sleep. Oh, somebody I know might be long Kiwi. So easy. Huh? Cool. Looks like it's been up a few hours. Nice. Very cool. Next challenge is going to be up in here, as we already know. So I got to be cognizant of that. So I'm going to mark that down. Pretty obvious though. So if we breach this purple zone here, I'm going to move my stop to break even, or maybe just even lower to here. I don't mind losing a few pips. And let her run. But you'll notice that this is a follow-up from last week's trade plan. So I'm only doing what I told you I would do, so I did it. It was a little late on the entry, but I was doing things. Okay. Okay. See me hit you, you fall down. Guess I should talk about maybe reasoning why. I'm not sure if you remember last week's webinar, but if I wanted to be long for the long term, what price do I want to be long? Pretty simple question. If I want to be long Kiwi yen, doesn't matter if the market's going to do it, but if I'm trying to do it, what is the price? What is the predetermined price I knew 2 weeks ago, 3 weeks ago? What was the price I knew 3 weeks ago in which I would want to be long term? Don't tell me support. Okay? Give me the exact price. I knew it 2 weeks ago, maybe more. Type in a question mark if you don't know. $67, 1950. I have 67, 1670. So we're like 2 pips off, currency traders. But I'm okay with that. M1! Chrissy. No, Chrissy. I want to be long 67.16. Okay? If you have slightly different numbers, don't get hung up on it. Okay? I want to be long. Oops. Delete. I want to be this one. I want to be long here. Okay? And I want to be long the entire month of October. October 31st, that is my date of birth. I got to the party and I did it. I did the Smurf. I get it. I got it. I know it's good. My rhymes are tight. You wish you could, right? So anyways, I want to be long all October. I don't know if I'm going to be, but that's the trade plan. Cool. Okay? So how about for this week? What price do I want to be long this week? Medium term. I'll give you a hint. Someone answered it for the last question, which is incorrect, but would be correct for this question. 67.50, wrong. Come on, guys. Get on it. Come on now. Don't say M1. Give me a price. And by the way, what are you guys all on this M1? That's ridiculous. No M1. Who buys that M1 besides a counter trend trader? Don't give me weekly M2. Give me a price. 67.19.5 is the weekly long. 67.16 is the monthly long. And I bought just on top of those two things. Okay? Weekly M2, monthly M2. Okay? You following me? Oh, and that's why I drew it out last week. Okay? Okay? Is that going to work? I don't know. I don't know. It's not behaving very well. Okay? Hey, right on, Daniel. There's two things I can't trade without. Price action, pivot points. Thank you for subscribing, everybody. Do you not think it will double bottom? Well, my stop is in place, so it wouldn't matter. Okay? Doesn't change my buy price. No, I wouldn't have a sell zone if I'm a bull. Okay? Cool. And you'll see something similar here. Okay. What is the monthly price, guys, that I want to be long? 72.01. What's the weekly price I want to be long? 72.02. What's the price I'm actually long? I'm actually on the exact price, 72.01. Okay, I have a weekly trade plan. I have a monthly trade plan. And you can see here, oops, delete. Okay, you can see here, I purchased this right there. Okay, and you can see my stop is down here. And you can see my trade plan last week was this. Up, down, buy. What has actually happened, it's not exactly the same. It went up, down, and buy. All right. Seems generally about the same, doesn't it? Okay. At least I have a plan. I don't know if I'm right. Be pretty clear when I'm wrong. Oh, of course, Sav. Absolutely. Okay. Pound, I'm waiting. It's not as good. So on and so forth. So we'll see. All right, so I'm going to go take a nap. It's 9 something in the morning. I need a half an hour nap. So, yes. So let's use that as I'm trying to lead by example, I suppose. So if I'm working 12 hours a day on my education, I hope you try to do the same. Okay? I'm just showing you what I'm willing to do to succeed. Okay? So if you had an easy afternoon yesterday, just sitting around on the beach, working on your suntan, you should have been, I don't care if you're on the beach, by all means, but you should be working on your career. Okay? So make sure, that's all. That's all I'm saying. I'm hoping, if anything, if maybe it inspires you to keep working hard too. It's nice to know you're not the only one. You know what I mean? I know you're working hard, but every once in a while you might sit back and say, I'm being ridiculous. And I'm like, yeah, I'm asking you to be ridiculous. I'm not asking you to be normal. Okay? Don't be normal. Don't be average. Don't be like your neighbors. Don't be like your friends. Be special. Be unique. Be ridiculous. Yeah. And I think you'll have a more enjoyable life. Yeah. So anyways, peace on earth. May the pips be with you. May your profits be above average. Thank you for all the thumbs up you've provided me. Hint, hint, hint. And I appreciate the comments that you leave on the recordings. And if you're new, please make sure you subscribe. Make sure you also go to Trader's Way and open an account. And also make sure you go to metatraders.com. You can download all my chart templates. So the tools I use every day will be the same tools that you use every day. See you tomorrow, guys. Have a wonderful trading day. Cheers.